49, 48, 47 marks are the worst marks to get in your ACCA exam. And in this very video, I will teach you how to spot marks that people usually miss so that you would get your 50 plus marks and pass this exam. And don't blame yourself for falling just short of the target. Now let's start with the standards that are frequently missed. If you have a financial reporting about the year 31st December 2026, the scenario also mentions something about the previous year, let's say 2025, then this is an invitation to use IAS 8, basis for preparation, and talk about whether the item is a change in accounting estimate, accounting policy, or an error. Therefore, whether it should be adjusted for retrospectively or prospectively. And these alone can give you 1 to 2 easy marks. Another standard that people tend to miss is IAS 10. If, let's say, your financial reporting is up to 31st December 2026, but the scenario is about year 2027, this requires you to discuss whether the event is adjusting or non-adjusting. Sometimes we have questions about IFRS 5 assets held for sale, IAS 37 when we are asked to talk about restructuring. And in this very case, we are going to focus on these two standards. But the thing is that it can also be an indicator for impairment. So you will be invited to say that the value in use may be lower than originally expected, and as such impairment testing has to be executed. And before we continue, please don't forget to subscribe and like this video so that YouTube is going to suggest some new episodes for you so that you would pass the exam. Let's continue. If the business of the company is changing, the value in use of asset may no longer be as high as expected, and you need to explain it to get a mark. So don't just limit yourself with saying that this is an indicator. Explain with the reference to the value in use. Almost every exam includes changes in group structure. And if control is lost, so for example, previously we held 70% and now we are going to be left with 30% only, you are going to get an extra mark by saying that the remaining interest is going to give the company significant influence, so it has to be equity accounted. If we have numbers, we will also need to say what will go to P&L and what would be at the end of the year, so shown in the statement of financial position. Another mark that people miss quite often is the presentation between profit and loss and OCI. So some standards include items that can be recorded in P&L, items that can be recorded in OCI. So for example, revaluation of property, plant, equipment will go to OCI if it is upward revaluation, and depreciation is going to go to P&L, and you are going to get a mark for saying explicitly where this item goes. So these have been some of the examples that can get you several marks. And my experience is that people usually miss 6 marks at least when they attempt a mock exam because they just don't pay attention to whatever can be tested extra on top of the standard that looks to be the core standard of the session, of the question. I hope it was useful. Don't forget to subscribe, don't forget to like, and I will see you in a week for the new episode. Bye!